Hello, investor, and welcome to our channel. Many people know Amazon by the box that arrives at their door. But is e-commerce still the company's main engine? Even with its huge size, does it still have room to grow? And most importantly, for us investors, is there still value to be unlocked? The answer is complex and requires us to look far beyond online shopping. In this video, we're going to break down Amazon's strategy, its financial health, its amazing competitive advantages, the risks it faces, and how its management uses the money we, as shareholders, trust them with. Stay with me until the end, because we're going to connect all these dots and show how artificial intelligence isn't just a tool, but is becoming the main engine of absolutely everything Amazon does, from the warehouse to the cloud. To start, think of Amazon not as one company, but as a two-headed giant. The first head, we all know, e-commerce. It's the absolute leader. Its size and scale allow for a product selection that no one can match at low prices. And the move to online hasn't stopped. But the real genius here is Amazon Prime. Prime isn't just about free shipping. It's an ecosystem. It brings in steady, high-profit money and makes customers buy more and more. In return, you get fast delivery, videos, music. It's a powerful good cycle. More customers bring in more sellers, who offer more products, which brings in more customers. It's almost a monopoly on convenience. Now, the second head, which many don't see, but which is perhaps the most powerful, Amazon Web Services, or AWS. AWS is the world leader in cloud services. While e-commerce sells products to you and me, AWS sells the digital backbone for other companies. Netflix, iFood, big banks, they all run, in part or completely, on Amazon's cloud. It's the backbone of the modern internet. And as we'll see, this is where the magic of making money really happens. The real growth engines. Okay, e-commerce is huge. AWS is the internet's foundation. But where is Amazon's future growth? The answer is in the profit margins. Retail, by its nature, has tight margins. But Amazon has two businesses that are true money-making machines. AWS itself, and a third pillar, advertising. Look at this chart. While e-commerce is growing, AWS and advertising are growing much faster, and very importantly, are much more profitable. AWS brings in between 60% and 65% of all of Amazon's operating profit, making up only 10 to 15% of its sales. That's incredibly efficient. And advertising? Think about it. Amazon knows what you search for, what you buy, what you want. For an advertiser, that's golden information. They can show an ad to someone at the exact moment that person is ready to buy. That's why Amazon's advertising business is growing super fast and is already a real alternative to Google and Meta. These two parts, AWS and advertising, are the main reasons why Amazon's profit per share should grow faster than its sales in the coming years. It's the key to the investment idea. Financial health. Diving into the numbers. All this sounds good for strategy, but what about the money? Is Amazon financially strong? The short answer is yes, very much so. At the end of 2024, the company had about $101.2 billion in cash and investments compared to $52.6 billion in debt. That's a very comfortable cash position. But some of you might have noticed that the company's free cash flow has struggled in recent years. What happened? That wasn't a sign of weakness, but rather a strategy. During and after the pandemic, Amazon invested a lot. It doubled its shipping network, invested heavily in content for Prime Video, like the Lord of the Rings series, and is now in a new round of big investments to meet the demand for artificial intelligence in AWS. These investments put pressure on cash flow in the short term, but they prepare the company for the next 10 years of growth. Once this investment cycle slows down, we expect to see free cash flow go back to much stronger levels. And what about dividends or buying back shares? Forget about it. Amazon is in full growth mode. Every dollar it makes is put back into the business to make its dominance stronger. And its purchases, even big ones like Whole Foods for $14 billion or MGM for $8 billion, are considered tuck-in, meaning small compared to its total size, designed to add to its overall system. The economic moat, the unbeatable competitive advantage. Now, let's get into the heart of the analysis for the long-term investor, the economic moat. Amazon doesn't just have one moat, it has a series of wide and deep moats that make each other stronger. We give it a wide moat rating. Let's break it down. 1. Network effect. As we've already said, more buyers attract more sellers, and vice versa. This creates a market with so much activity and variety that it's almost impossible for a new competitor to copy. Half of everything sold on Amazon comes from third-party sellers who pay Amazon commissions and shipping fees. 2. Cost advantage. With nearly $600 billion in goods, Amazon has huge buying power. Its shipping network is so good that the density of routes lowers the cost per delivery. It's becoming vertically integrated, with its own brands and its own delivery fleet. This crushes the profits of anyone trying to compete on price and speed. 3. Intangible assets. The Amazon brand means buying anything online. Most product searches today start on Amazon, not Google. This is a very valuable intangible asset. Plus, its technology, from recommendation systems to developing its own computer chips for AWS and robots in its warehouses, represents decades of collected knowledge. 4. Switching costs. This is AWS's strength. Once a company builds all its computer systems on Amazon's cloud, moving to a competitor like Microsoft Azure or Google Cloud is very expensive, takes a long time, and is risky. A company's important systems are rarely changed. This ensures steady and predictable income for many, many years. The most impressive thing is how these parts connect. AWS technology helps make e-commerce shipping better. E-commerce data helps the advertising business. Cash from AWS and advertising pays for the expansion of Prime Video and one-day delivery. The whole thing is much, much bigger than the sum of its parts. The AI revolution, the new rocket engine. We talked about Amazon's economic moats, network, costs, brand. Now let's talk about the technology that's making these moats even wider and deeper, and which represents the biggest growth opportunity for the next 10 years, artificial intelligence. AI isn't new to Amazon. It's been using machine learning for over 25 years. But the age of generative AI, made popular by ChatGPT, has opened up a completely new frontier. And Amazon is uniquely positioned to dominate this frontier, working on two main fronts. Front 1. AI optimizing current business. First, it uses AI to make its existing operations incredibly efficient. You know those product recommendations that seem to read your mind? That's AI, and it's responsible for a big part of sales. In logistics, AI makes delivery routes better to save time and fuel on an unimaginable scale. Inside warehouses, robots like Sparrow and Proteus, guided by AI, find and move millions of items every day, increasing speed and lowering costs. And with generative AI, they're going even further. They're testing AI to create summaries of thousands of customer reviews, giving you the main idea of what people think of a product in seconds, or helping sellers create more appealing product descriptions. Every small improvement, multiplied by Amazon's size, creates billions in value. Front 2. AI as the next big business. But the real gold mine, the trillion-dollar opportunity, is on the second front, selling AI tools to other companies through AWS. Amazon wants to be the platform on which the AI revolution will be built. They're not betting on just one AI model. With the Amazon Bedrock service, they offer their customers a kind of menu of top-notch AI models, including their own, called Titan, and those from partner companies like Anthropic's Claude, in which Amazon invested $4 billion. This is brilliant. Instead of picking one horse in the race, Amazon is selling the tools, the track, and the stables to all competitors. For developers, they have Amazon SageMaker, a complete platform to build, train, and use their own AI models. Basically, if a company in the future wants to use AI on a large scale, it's almost certain they'll become an AWS customer. So AI at Amazon is a double rocket engine. It cuts costs and makes its current business more efficient, while also creating a completely new and massive revenue stream through AWS, making its position as the backbone of the digital economy for the next 10 years even stronger. Risks and uncertainties. What could go wrong? This huge size and the race for AI come with significant challenges and risks. No analysis would be complete without an honest look at these risks. And for a company as big as Amazon, they are not small. We give it a medium uncertainty rating. 1. Competition and execution. In retail, competitors aren't standing still. Traditional retailers like Walmart are investing a lot in their online operations. Staying ahead means constant innovation and investment, which can continue to squeeze profits. 2. The artificial intelligence race, competition in the cloud, which was already tough, has become a real arms race with generative AI. Microsoft, with its strategic partnership with OpenAI and strong Azure integration, and Google, with its powerful own models and Google Cloud, are strong competitors. This is a battle of giants that requires billions of dollars in research and infrastructure investments. If AWS can't innovate at the same pace, it risks losing its lead in the sector that is, by far, the most profitable and important for Amazon's future. 3. Regulatory risks. This is perhaps the biggest risk. Around the world, regulators are watching Amazon's market power. Antitrust lawsuits, data privacy laws, and questions about how it treats sellers on its marketplace are real threats that could result in big fines or even orders to split up parts of the business. 4. Data security. As the protector of data for hundreds of millions of consumers in retail and critical company data in AWS, a massive security failure would be disastrous for trust and for the company's business. These risks are significant, and investors need to be aware of them. The journey won't be a straight line up. Management and capital allocation, the mind behind the machine. So, who's in charge to navigate these challenges? And how do they use the company's money? Here, Amazon shines. It has an exemplary capital allocation rating, the highest score. The balance sheet, as we've seen, is a fortress. But the management's history of investments is what stands out. Jeff Bezos, the founder, created a culture of thinking long-term and making bold bets that many on Wall Street initially hated, like AWS itself. This culture continues with the current CEO, Andy Jassy. And who is Jassy? He was the mastermind behind the founding and explosive growth of AWS. His rise to CEO is the clearest sign that Amazon's future is focused on high-profit, high-tech businesses. He has already guided the company through the challenges of the pandemic and now faces the huge demand for generative AI, a challenge for which he seems perfectly prepared. The idea is clear. The best return for shareholders doesn't come from dividends, but from putting every penny back into projects that make the economic moat stronger and ensure future growth. Their track record proves they know how to do this better than almost anyone. Conclusion and investment thesis. Let's tie all this together. What do we have here? First, absolute dominance in e-commerce and cloud, which form the base of the empire. Second, high-profit engines, AWS and advertising, changing the company's profitability. Third and most important, a leading position in the artificial intelligence revolution, using it to make its operations better and especially to create a huge new business in AWS, which represents the biggest potential for future growth. Fourth, a wide economic moat, now made stronger by AI technology and excellent management with a complete focus on the long term. The risks, especially regulatory ones, are real and have been made worse by the AI race. However, the investment idea for Amazon today is even stronger. It's no longer just a bet on the cloud or retail. It's a bet on the fundamental infrastructure of the future digital economy, where artificial intelligence is the main support beam. And Amazon is providing that beam to the whole world. That was our analysis of Amazon. It's a giant that's always changing. Now I want to hear from you. Do you think Amazon's AI strategy through AWS is the winner in the AI race in the long run? Leave your opinion in the comments below. If you like this video, don't forget to give it a thumbs up, subscribe to the channel, and turn on notifications so you don't miss our next content. Thanks for watching, and see you next time.